Welcome to the InterMarket Analysis Update. This is being prepared Sunday, July 10th, where we'll see how the S&P is doing against other markets. And I have a lot of slides to cover and a lot of interesting things that are happening right now. But this applies to Monday, July 11th. So let's first look at S&P 500 valuation. We're coming back down from being very overextended as far as valuation is concerned. Now, this is using the trailing 12 months. So we're looking back. The stock market looks forward. And on a forward basis, we're more fairly valued. But looking back, we have the top line, which is red. We've come back down to that. That's with a PE ratio of 20. And down on the bottom, this shows the distance between those two lines. And so we're coming back down, at least on a historical basis, more into a reasonable territory as far as valuation is concerned. And then here's the next chart, just showing historically different things that have happened and how the S&P has behaved when it's overvalued, fairly valued, or even undervalued. What I want to talk about first are some possible positive scenarios. These are some things that I'm seeing in the daily charts, and I go through these in the daily videos, but a lot of you don't watch those. So I want to expose these to you just for you to see them. One thing that we're seeing is the percent of S&P 500 stocks that are above their 200-day simple moving average. We came down and gave almost an extreme negative reading, about to where we hit back in the Christmas Eve mini crash that we saw before we really saw the S&P go higher. And then here's the COVID low. Well, we came down to this level and we're now bouncing up out of that. And if you go back and look, you'll see that a lot of times when we hit a low with this indicator, that often signaled a low in the S&P. Another one is looking at the 10-day average of the S&P 500 highs and lows. We also had a pretty extreme negative reading and we're now bouncing back up. Again, if you compare that to the chart above, you can see where that often marked a low. Another thing that we're watching is recently we saw a spike in the VIX. This is a 5-day moving average of the VIX. It came up to quite a high reading. It's been higher before, but this is considered to be a high reading and has now come back down to where I have this area shaded. And again, if you look at when we've hit lows, or excuse me, highs in the VIX and then have come back down, this has often marked a low in the S&P. So we have a lot of different signals kind of coming together right now. Another thing that could be positive is we're seeing some sector rotation. And that's what we deal with in the intermarket analysis video, or how are the other sectors performing? Well, the growth areas are starting to show some strength again. Here we have the QQQs, which is a growth area, and that is starting to outperform the SPY. That could really help the indexes go up and see some gains in the market. Back in late 2021, we saw just the opposite happening. The S&P was making a higher high, but we saw a negative divergence as the smart money was getting out of growth and getting into value. Now we're just seeing the opposite of that. They're getting out of value and it looks like they're getting back into growth. Can this continue? We're seeing that with discretionary. It's also starting to perform better. And when we compare the growth with the value large caps, we're also seeing a real improvement here. Here's another chart. This is growth in value with the large, mid, and small caps, showing that the growth is starting to perform better after seeing a positive divergence with the S&P. It made a lower low, but these other ratios did not make a lower low. Another thing that we're watching is the 2-year yield spike. It's been going up and now been dropping back. Are we at a spike right now? Other times this has marked some kind of a low, usually short to intermediate term in the S&P. If we are at a spike right now, that could bode well for the S&P going forward. We're also looking at staples, where they've been really strong over the last few years, especially since the COVID low. They've been in a solid uptrend. We're starting to see them break down now, where the blue line is coming down closer to the red line, and we might see a death cross with this sector. Now, how we use that is we compare the staples to the S&P 500 ratio. And when this spikes and starts to come down, that often marks a bottom in the S&P. And you can see other times when that has happened. The problem with this is we're not ever really sure if a spike is happening when it's happening. You can go back and look at other times when it looked like we spiked, only to have that not really turn into anything. So we want to be careful with this, but this can be very powerful, especially since we're lining up with some other indicators. Looking at growth versus value, we're seeing the growth index really underperforming, but overall, but it's starting to come back up to the moving average. Can it break above this moving average? Looking at value, it is starting to show some weakness also. We've just seen a death cross with value, and value itself with this index is below both of the moving averages. So when we compare the two, here's growth against value, showing that growth is starting to break out potentially, but it still has a ways to go, where value is starting to break down slightly. Also looking at this another way, here's the growth index against the value index, where growth has really been underperforming, but now it's starting to show some improvement. But we're not back to a positive trend yet, but this is what could be happening. The first part of 2022 was really terrible. Now we're into the second part. Are things going to perform better? It looks like we're at least trying to get off to a positive start. Here's an inverse of that same chart showing how value has really been doing a lot better, but showing some recent weakness lately. Here's another measure showing growth against value, where growth has been in a downtrend, but starting to bounce back. And here we have another inverse chart of that. We just show the inverse charts just to get a little bit different perspective on things. Some of the other markets, looking at inflation, and this is a monthly chart. Here's the CRB, which has been in a solid uptrend. And then down below, we have the inflation area against the deflation area. So when this is going up, that means there is inflation. When it's going down, that means inflation is subsiding, or we're possibly even seeing deflation. And we can see here where it has been showing some recent weakness. Is inflation getting under control? Here's the CRB index, which has been really strong and in an uptrend, and it's still in an uptrend, but it's really been falling back. It bounced back a little bit on Friday, but still we want to keep an eye on this. Just to show you some other areas, here's corn, which had really spiked up and is now falling back, even though it did bounce a little bit. Aluminum was really high, up over 320. Now it's down around 153. So it's really fallen quite a bit. Here's heating oil, which had been spiking up in the middle of summer, which I don't quite understand that. It's been falling down a little bit, even though it has bounced recently. Gas, this is what we all have to deal with. We really spiked up, and then we've been coming down, even though we bounced back up slightly on Friday. Natural gas also spiked up and has been coming down a bit. Oil, it got underneath 100 in the week, but by the time the week was over, we were at 104.79. Wheat, which really spiked up, coming back down, but showing a recent bit of a bounce. Lumber, which really had been in a solid downtrend, has been starting to go back into an uptrend. The US dollar, which pretty much has held up the best, my goodness, for a fiat currency, it's really doing quite well, especially against the Japanese yen and the euro. But it declined a little bit on Friday, but we're still in a very solid uptrend. And here's the euro showing some weakness, and here's the dollar showing some strength. The euro has actually gone underneath, or the dollar has actually gone ahead of the euro. We haven't seen that in about 20 years. Here's showing the Japanese yen with some weakness. And here's the euro also showing weakness, with the dollar showing some strength. Now, getting back to this dollar though, before we go, we want to keep an eye on that, because the market likes a weaker dollar. And that's been some of the headwind for stocks going up from here, because the when you convert things, that looks better on the books and it's better for imports and exports. So it makes companies earn more and actually look like they're earning more at the same time. So if we start to really go higher with the S&P, we'll probably want to see, or we'll be watching to see if the dollar starts to fall. Copper, which had been quite weak, and this is kind of a barometer, and it can be a leading indicator of the economy, where it's really been coming down, but bouncing back up slightly. And I have another chart that shows the copper to gold ratio. Gold has been really not doing very well, and I'll have some charts to show you on that. The copper has really been underperforming gold, even though gold has been having trouble. And here, this is the same chart, the black line here that we just looked at, just longer term. And this is the gold or the copper gold ratio. And then here is the 2-year yield, showing how yields have really gone up, but they've come back down slightly. But there's a real strong or real wide separation between these two. They tend to move more hand in hand with each other. This has gotten out of line lately. And one of these we'll have to see. Are interest rates going to come back down? Is copper going to start to outperform gold, or a combination of the two? Here we show gold really not doing very well. It's just had a recent death cross on its ETF chart. Silver has also not been doing very well. It's in a downtrend also. Looking at some different indexes, here's the CRB, which had been underperforming the S&P. Well, for 2021 and 2022, it's been outperforming, but now we're starting to see some weakness. And here's the S&P, which had been outperforming the CRB, but in 2021 and 2022, it showed some weakness, but now could be starting to bounce. Here's the Nasdaq 100, and those are the growth stocks. They're starting to perk up a little bit when compared to the S&P 500, which has growth and value in the index. So if we want to see things really move higher, we want to see the NDX or the Nasdaq 100 do well, even though it's still in a downtrend. Looking at some other stocks, these are the big software companies, and they're still in a downtrend, but could they be starting to bounce a little bit? Here's the big stocks, the mega cap growth stocks. They've been in a real downtrend as well, but could they be starting to bounce? These are the areas that should come alive if that rotation that we're talking about is really happening from value into growth, because these are growth stocks. The S&P 100, which are mainly growth stocks against the S&P 500, it is starting to perform better, even though it's still in a downtrend. Small caps just aren't really doing very well now. We're looking at the ratio between small caps and the S&P 500. They've been really underperforming recently. And here's a chart that we look at to sometimes get some insight, where this red line, we want to see it spike up. And then sometimes after that, within a few days, this blue line, which is the S&P, it might start to go up as well. We're just not seeing that. So that's not really a viable thing to look at for a positive scenario right now. Low volatility, after really doing well, especially in 2021 and back to 2020, they're starting to break down, and we're seeing a recent death cross here. These are the stocks that folks get into when the market is having trouble. And the next chart just shows a ratio where the low volatility stocks, they're still in an uptrend, but they've been coming back down to the moving average and showing some weakness. Here is the Dow Jones Composite average, taking the Dow, the transports, and the utilities all together. And it's not really performing all that well right now, but at least it's holding up. Here's Dow Theory. We're looking for divergences here, but I'm not really seeing any with the Dow and the transports. They're kind of moving in the same direction. Utilities, which did have a pretty good run in the early part of the year, they've been showing some recent weakness, but lately they've been bouncing back a bit. And here's just a longer term look of the Dow Theory charts. These are the other indexes. This is the S&P large cap, mid cap, and small cap indexes. And here is a broader look at the highs and lows across the Amex, Nasdaq, and NYSE. And then we take a 5-period moving average of that and plot it on this chart down below. and we had an extreme negative reading. Well, we're bouncing up out of that. And again, if you look at this, sometimes this can signal that we're either close or getting close to a bottom in the S&P 500. Here are the Fang stocks. These are the big darlings that a lot of people just love. They've really struggled in 2022, but are they starting to bounce back a bit? Looking at bonds, we have bonds still really under pressure. They're in a downtrend. And these are all of the different treasury bonds combined into an ETF, where here's world bonds. Looking at not only US bonds, but world bonds, they've been in a real solid downtrend too, but are trying to stage some kind of a bounce. We're going back and testing the COVID lows based on price. But that could really help stocks. If bonds and stocks could start moving in the same direction, because as bonds go up, interest rates come down, and that might help the stock market go higher. Here's a monthly chart of the stock bond ratio showing that we did show some breakdown recently where stocks had been outperforming, but now they're starting to kick back into gear, at least as of this chart. Here's the bond to stock ratio showing how bonds have really been underperforming. We're breaking out. We actually have a golden cross here. Can that continue? It would be nice if we could see both stocks and bonds go in the same direction, but quite often for lengthy periods of time, that does not happen. Here's the S&P 500 against the 10-year treasury yield ratio, where it just shows that the S&P it came back up to the moving average, but lately has been underperforming. And we have two yield curves right now that are inverted. The 10 to the 5, it's gone negative, and the 10 to the 2 is also negative. And this is the one that most people watch. So this is what, if you hear anything about this, if they say the yield curve's inverted, they're probably talking about the 10-year to the 2-year yield curve. Junk bonds, also in a downtrend right now. And here's a relation between junk bonds and treasury bonds, where we're seeing some weakness lately, but they're still in an overall uptrend. Here are the yields across the US treasury bonds, where we have the 30, the 10, the 5, and the 2, and we see that interest rates are going higher. Here's world bonds showing that the US has bonds going higher. Here is the UK going up slightly, Germany, and then Japan, which has been having a lot of trouble. Yes, they had their former prime minister assassinated on Friday, but from an economic standpoint, they're kind of in a different scenario. And I deal with this in my other videos, talking about how this may come into the future at some point and really have an impact on the markets. Looking at some sectors, the energy sector, which has been the #1 sector for 2022, has been showing some recent weakness when compared to the S&P. Here's the tech sector, which has really been underperforming, but is it starting to bounce now? This is a growth area, as is semiconductors. They've been in a downtrend, but are they starting to bounce? The tech sector against the S&P, well, they both been really having some trouble, but the tech sector is just starting to come up a little bit. And we want to see this outperform if we're going to see the S&P really get set to go higher. Or is that going to wear off and we just see some positive setups that go off into the wind? That's what we're kind of waiting right now. Some other areas, looking at growth against bonds. Both have really struggled in 2022, but growth is starting to come back up to this moving average. Can it break through that and then actually stay above it? Here's the 10-year yield against tech. This shows how the 10-year yield has really gone up faster than tech has, but can tech really start to go higher? Here's tech. This is an inverse of that same chart. Tech, it was down a little bit in the latest reading, but can it continue to keep going higher? Here's discretionary against staples. We've been watching this very closely, where discretionary has really been underperforming, but discretionary is kind of coming back to life a bit, but they still have the moving average right here. And here's the inverse of that chart, showing how staples have been much stronger, but are showing some recent weakness. Here's the energy sector to tech. Energy's been doing really well, so this is going up. The tech sector has really been struggling. And pretty much, if we see this rotation, we'll want to see tech really come alive and start to outperform energy. for the second half of the year. Gold, which has really been struggling, and the S&P, which have really been struggling, shows that gold is still in an uptrend, but it's showing some weakness. Here's the gold to the dollar. The dollar's been doing really well. Gold's been going down. So we see this ratio going down when compared to gold. The high leverage loans, want to keep an eye on these. As long as they're holding up, this bodes better for the economy. InterMarket Analysis shows that oil had been showing some weakness and then made all the headlines and everything. Well, now it's starting to bounce back up. And then in second place, you have the dollar doing pretty good. Gold has dropped negative for the year, and stocks and bonds continue to be negative. Looking at some other indexes, here's the S&P. And then as I looked at the 200-day moving average, well, here's the 50-period moving average, where we went extreme negative and are bouncing. Same thing with the mid caps and same thing with the small caps. So we're seeing some confirmation here on an intermarket analysis basis. So we're seeing a lot of things happening at the same time. The small cap index, it's still in a downtrend and it's still below its pivot level. What we want to see from this is, can it get above the pivot? And if that happens, can it get back up to the moving average? The mid caps are right up to the pivot. Can they break above that? Can they get to the moving average? The Dow, which has held up the best, it's still above the pivot and actually came back above it this past week, which is positive. Now, can we get up to the moving average? The Nasdaq, which is kind of in the lead right now, they're above the pivot and they're up to the moving average, which is now acting as resistance. Can the Nasdaq break through this moving average? Nasdaq 100, same thing, above the pivot, at the moving average. Can it break above? Wilshire 5000, above the pivot, and can it get up to the moving average? ARC, which has really had just a terrible 2022, could it be starting to bounce right now? It was up strong on the week and has been showing at least an attempt at starting to bounce. All stocks, both US and international, they're in a downtrend still, but are they starting to bounce? Emerging markets, also in a downtrend right now. Looking at some international markets, China might be topping out and getting ready to roll over, where you have emerging markets. They've been in a downtrend, but could be starting to turn back up, as is Europe and Japan. And the US with the S&P has already started to turn back higher. Some correlations. Not a lot is really being told right now. We're either in neutral territory or they're going in the same direction. Where I really pay attention to these is when they go in the opposite direction. Where here's the S&P to the dollar, pretty much neutral. When we have a 0.25 to a minus 0.25, I kind of consider that neutral territory. Here's the S&P to the dollar, also more neutral right now. S&P to the 10-year, they're actually starting to go in the same direction a little bit, where usually they tend to go in the opposite direction. And then the tech sector to the 10-year, they're going more in the same direction now as well. And here's the S&P to the 2-year yield. They're also going more in the same direction currently. So we have our positive areas, and these haven't changed if you've watched any of these videos. We're showing some weakness in these different areas, but they're still positive. And then the negative areas, they're looking better in a lot of different areas, but they're still negative overall. And we need to see more follow through right now. So thank you. Have a wonderful week. Please feel free to check out the weekly video or any of the daily videos and see if those will be helpful to you.